Hey gang, it's Simon here with an answer to a quick question I've been receiving a lot lately concerning things like gold. People are looking at moves like gold, moves like the energy sector, saying, wow, these things have just gone up in a straight line. Is there a good opportunity to short them? Shorting rocket ships is always pretty risky. Right? I mean, what do I mean by a rocket ship is something that's kind of gone up in a straight line. Yeah, it probably won't correct by going sideways, but trying to catch the top in these moves, very, very tricky. Now, this is a chart that I look at to assess where a stock is in its trading range relative to its mean. When we get to 3 ATRs above the mean, generally mean reversion does become a higher probability. And so you can see in the case of gold, we're kind of like 4.5 ATRs above the mean. So that does argue for some mean reversion, but mean reversion can happen in two ways. Yes, price can come back to meet the mean, or the mean can keep rallying and eventually meet price, in which case shorting it is going to be very painful. So back to gold, another thing that we can do is assess whether Fibonacci target levels have been hit. Now, something like gold that's trading at new all-time highs, you can't look at previous areas of price action to determine where the next resistance level will be. We need to make some Fibonacci projections. So we'll grab our Fib tool and we'll do a projection from, say, this swing high. Let me grab the tool again. From this swing high to this swing low, where does that get us? So you can see the 1.272 nailed that high. This defined the channel. It's just blasted through the 1.618. All right, so this is an indication that there are higher highs to come. Let's zoom out and see if there are any other swings that are relevant for analysis. Let's just scrunch this chart in a little bit. And let's have a look at this swing from that swing high down to this swing low. And again, you can see how the 1.272 almost wicked that high there, acted as support coming in here, but again, price has just blown through the 1.618. So that indicates to me the higher probability is there are still some higher highs to come. Let's zoom out to a weekly chart and have a quick look there. Let's run some fibs from that major high to that low. And again, blown through the 1.272. We've got a 1.618 target up ahead at sort of 23.63. Let's have a look at this swing here. We'll run from that swing high to that swing low. And you can see how the 1.272 and the 1.618 are kind of overlapping each other. Here we've got two targets, 23.46 and 23.63. Call it 23.50. All right, that would be, I think, a minimum reasonable next target for gold. So even though it looks extended, I think the play here is to continue to buy the dip. And if we don't get a dip, don't worry about it. There are thousands of other symbols you can trade. That's what I got for you. I hope it helps, and I'll catch you tomorrow.